Hello, and thank you for joining us today. Visions Investment Services is pleased to share another virtual seminar as part of our Women in Wealth series, where our goal is to empower women, connect women, and educate women. I am Marcy Depew, financial consultant, and I will be your host for today's event. We are pleased to have Nancy Femme, Senior Director of Business Consulting from Russell Investments, joining us. Her topic, entitled Women, Wired to Invest, will help all of us on our journey to develop and implement strategies towards overall success. Nancy, I'll turn the program over to you.
Welcome, everyone. Thank you for joining us today. My name is Nancy Femme, and I'm a Senior Director with Russell Investments. It's an absolute pleasure to be with you all today. This topic of women and investing is certainly near and dear to my heart, not only as a female working in the financial services industry, but also to the mother of twin 10-year-old daughters. I have sister-in-laws and nieces and cousins, and we all care about financial literacy, financial empowerment, and really sort of taking control of the topic of women in finances. So this is a topic that really comes sort of close to where I come from. My hope for today is to sort of evoke a feeling of a sisterhood, to really allow you to feel comfortable with being able to talk about money, investing, what it means for you, for your family, and for your life. We know that money, investing, and finance is a topic that is absolutely paramount to women, especially as I share some of the statistics around how and when women will be in control of their own financial outcomes. So my hope after today's session is that you feel more equipped to join, to influence, to guide, and to steer money conversations and decisions with the people that are important to you as well as yourselves. So let's get started. We're going to be covering three topics today. First, we're going to be discussing, what are the wealth implications for some of the great things that are happening for women, whether that's our better health, how we're accessing various jobs and vocations, our higher education. All of these things really influence and change how we are impacting not only the economy, but how that might have implications for ourselves as well. Then we're going to talk a little bit about some of the traits that make women naturally equipped to be very strong investors. We generally have really great intuition when it comes to other things, and that translates really well into investing as well. So we want to be able to use that savvy that really is within all of us, and to use that to sort of empower our decisions. And then next, I'm going to be talking about sort of what are the next steps? What are some of the ways that we can get ourselves involved as well as others around us? And so we'll be talking more about taking action and putting intention behind this topic today. So let's start off with the topic of the wealth implications of better health. We've all heard the statistics about people living longer, and I'm sure you can even think of people in your own life that you've seen, whether you've celebrated an 80-year-old or 90-year-old birthday for some of your relatives. And we've even seen women reaching that, milestone of reaching 100, right? There's lots of great things to celebrate when it comes to longevity. People are eating healthier. They're taking time to be, more fit and use exercise as part of their daily routines, right? So it's great that we are living longer, but there's absolute ramifications and implications for that better health. So I love this quote here by UB Blake, who says, "If I'd only known I was going to live this long, I would have taken better care of myself," right? So let's start with, the idea of women really increasingly having to take control of their finances simply because we are living longer. This is a statistic that I love using because according to census data here in the United States, there are about 105 baby boys that are actually born for every 100 baby girls. But at some point, women start to overtake the population when it comes to that shift. And so when I always ask the question, at what age do you start to see that women are actually a larger part of the population? Most people guess well into people's 60s or 70s or even 80s. And they're pretty surprised to learn that it's actually at the age of 35. So at age 35, women start to outnumber men by an increasing margin throughout their kind of those peak earning years. And so it's really important for us to really understand that because women are living longer, that's going to have an absolute impact on their personal finances. Now they have to stretch those nest eggs out even longer. I want to talk about also the growing female economy. We have really a lot to be so incredibly proud of. Women are a force to be reckoned with. And we look at that because of education, vocation, and our career status, as well as our marital status. When we think about women, especially when it comes to education, women are becoming more and more educated, even over men. And some of the statistics I want to share are that according to some of the studies that we've looked at, women actually earn half of all medical and law degrees. Women actually are awarded about 57% of bachelor degrees and 60% of master's degrees and 52% of PhDs. Now, when we think about, what that means, right? More and more women becoming educated, that is phenomenal forward progression. So is vocation, right? When we think about women, we make up essentially half of the workforce today. And we see women really kind of taking up all various positions, whether it's executives or female-owned businesses who've become billionaires. We see this more and more happening, and more than actually we've seen in the past. Women-owned businesses are actually growing at twice the national rate for women. Also, women are great entrepreneurs. In a lot of the industries we see, they've had really successful businesses, and we're seeing that women-owned businesses are really, if we combine them all together, they would be their own country when it comes to the 5th largest GDP in the world. So another way to think about that is that women are taking a lot more control over their careers, whether that's working in corner offices and C-suites or businesses. But the last area I think was probably the most shocking or most astonishing, which is marital status. You might not think that that has a big deal to a lot of the financial implications, but I want us to think about our grandmothers or even our mothers 40, 50 years ago. Women felt like they didn't have a lot of choice when it came to being married. A lot of women felt like they needed to be married in order to be financially secure. And that's just simply not happening anymore. Women are now deferring marriage, whether they choose not to ever get married or they get married later in life. They're actually initiating divorce. Yes, the divorce rate is still around half. That number has not changed, but the different number that I was surprised about was that more women actually initiate divorce over men. So whether that's a gray divorce or when we're older in our life, or it's as a result of being widowed, the reality is that women will be in more and more of their control of their finances because of this marital status changed. So when we think about how women are living longer, they are impacting the economy. What about to their sort of financial approach to how they manage money or think about money? We've all heard the book, Men Are From Mars and Women Are From Venus. And there's probably a really good reason as to why this is still a #1 bestseller, even 25 years after it was first published. But there was a study that was conducted with both men and women, and they were sort of asked to choose, what's important to them on a list of, I think, 19 variables, 19 questions. And women overwhelmingly said that spending time, quality time with their family and being a good parent is over 3 times as more important to them than being financially prepared for the future. In contrast to men, financial security came in as a very close second to spending quality time with family. Now, this doesn't mean that investing isn't important to women, or that being a good parent is not as important to men, but it certainly does provide some responses or gives us almost insight, if you will, into how men and women have very different attitudes about investing. So, when I think about this for myself, I do this in my daily life. My husband and I, we have a daily sort of division of responsibilities. And I think about all the decisions that I'm making on behalf of my family, whether it's researching car seats for my son, researching summer camps for my 3 children, applying my children for various sports and activities and registering them, right? Taking them to their annual doctor's appointments. It just seems to be that my decision making is centered more around that family. And so what we want to really kind of bring to light here is that's pretty normal, that's standard. But it's all about knowing the implications of what financial decision making has for ourselves that really is going to help us drive action into the future. You know, another way that men and women are different when it comes to investing is sort of risk, or maybe even assessing risk. Now, I would caution us to sort of stereotype and believe into the hype, or kind of fall victim to that, that misnomer that women just don't take risk. They're risk averse, right? That's actually not true at all. I love this quote by Sally Krawcheck, who's the CEO of Ellevest. She says, supposedly, women don't invest as much as men do because we're risk averse. That's not true. It's as if the world is telling us that somehow having a uterus tucked inside of our body keeps us from taking on risk. It's not true. We're more risk aware, that's the word, than the guys are. That means we want to understand risk before we take it. So this is a fallacy, a misnomer, a myth that I would say plagues women, as well as people that really sort of assess our ability to be good investors, is that women don't take risk. And that's not at all the case. It's just that women want to know, for whatever risk they do take, that they're going to be paid and compensated for it. They want to know what the risks are, what the implications are. They want to do their research. And it's very deliberate in terms of how they make decisions. So we can use that in sort of all aspects of our life, whether that's researching, colleges or schools or kindergarten programs, to investing in the stock and bond market. But we also have to look at what the implications of being risk aware can be for women. So let's do that next. Imagine we've got a 65-year-old man, let's call him George, and a 65-year-old woman, we'll call her Anna, and they're both ready to sort of retire. And they've each accumulated a nest egg of a very, sizable nest egg of $1 million. Now, based on a certain set of assumptions, which we will have to take, right? Like things like life expectancy, we talked about that, market returns, we can estimate that in retirement, George will likely have about $7,100 per month of pre-tax income to be able to live on, right? And that's if he invests in a portfolio that's made up of about 70% stocks and 30% of bonds. Now, depending on what country you live in, that's a pretty sizable amount of income to live on in retirement, right? Now, let's take into consideration Anna, right? We know from the statistics earlier that Anna will have a higher likelihood of living longer, on average between 5 and 6 years longer than male counterparts. And so as she thinks about that $1 million nest egg, she now has to stretch that over a longer period of time, right? So by virtue of that, she's going to have less income, in this case, about $6,400 per month. Then we have to factor in the wage gap, right? That's one thing I haven't mentioned yet, but no matter how many of the advances we've made from a vocation and education perspective, women still on average earn about 82 cents on the dollar for every male in a similar position. And so by virtue of that, she simply will earn less for the exact same time in retirement. In that case, that means her nest egg, or her retirement monthly nest egg, will be only about $4,500 per month. Then lastly, if we sort of factor in this idea of risk awareness, in that women will take lots of decision making to be able to make sure they make the right decision. Sometimes we call that the perfectionist element of a female. We don't like to make decisions until we know precisely we're making the right one. That too can have a bit of an impact on her outcome. So simply because she was born Anna and not George, right? She's simply going to have to live with less income on a per monthly basis. So the whole point of this exercise, this what if exercise, is that financial planning for women will require a different set of assumptions. And it's going to require a different set of analysis, and perhaps a different set or course of action. And we think that in working with a financial advisor, investors, particularly female investors, are going to be better set up to be able to navigate some of the challenges that they might encounter throughout their life cycle of investing. But the reality of it is that whether we've earned it, we've married it, we've divorced it, we've inherited it, or outlived it, the sobering statistic here is that 90% of women at some point in their life will actually be in control of their finances. Now, the danger is if you're not prioritizing your financial security, right, you may not feel equipped or ready when that actually starts to happen. And we want you to know that we want 100% of you to be ready for it. So we're not just aiming for that 90%, we are aiming for that 100%. And the mission is certainly what motivates us today, what motivates this conversation, this presentation, and this topic is the fact that you have access to this information, this knowledge, and hopefully after today's session, you feel more equipped, empowered, and have more conviction and confidence in what your action plan can be. Now, the good news is that half of all investors are women, and they don't necessarily wait to be making these decisions. So let's think about how we can actually start to impart some of that knowledge today. Let's talk about areas where there's some even or equality. I love that part of the conversation, right? We see that women and men are almost exactly the same when it comes to emotional decisions or emotional roller coaster of investing. Frankly, the market is sort of gender neutral. This actually shows the US stock market mutual funds in orange, and how the money has gone into and out of certain mutual funds. So it's sort of the flow of money in and out of the US stock market mutual funds. So anything above that black line shows, money in, anything below that is money out, right? And to provide some additional context, we also added sort of the value of the US stock market return in the blue line. Okay, that's that blue jagged line. So there's a lot of information on this chart, but one of the first things we're going to notice is that the overall trend of the US equity stock market is the blue line. And you can see that over time, the market has gone up, right? If you are invested in the US equity market over time, there is a reward for having higher returns. They have increased in value over time. Now, what have we noticed about the orange bars, though? Is there a rhyme or a reason to those movements? Well, you can start to see that as markets start to go up, the blue line, right? You'll start to see that the yellow or the orange bars also start to go up. And that's typically because investors will see the market return and they want to participate in that market return. Now, unfortunately, it's sort of driving forward using your rear view mirror. Probably not the smartest thing to do when you're driving a car, right? You want to be looking forward, not backwards. And so ultimately what we see is that investors will use backwards information in order to drive their decision-making forward. And sometimes that doesn't always work out. So when you have to sort of think about fighting your own tendencies, your human instincts to sort of participate in a market uptick, or maybe sell out when markets fall. We often see this happen when markets go down. Investors sell, they go to cash, and they do it at precisely the wrong time. And we saw this happen not only in the technology crisis when markets really kind of fell off and sharply sold off in 2000 and 2001, but we also saw it during 2007, 8, and 9 during the credit crisis. And we certainly saw it during February, March, and April of 2020. The problem is that when investors are constantly chasing returns, they let their emotions really kind of create this effect. And this is market and gender neutral, meaning it doesn't matter if you're male or female. The market is emotional. And we know that investors tend to get excited on market highs and they participate in a late stage rally. And then they get really sort of scared and panicked at the bottom of a market and they sell out precisely at the wrong time. And so they're constantly buying high and they're selling low, and they're never ever going to get the sort of true value or true return of the market. And how do we know this? Well, over the last, say, 20 or so years, the average market investment, in this case, the Russell 3000 index, has returned about 11.05%. However, the average equity investor, male or female, actually only returned about 9.2%. So essentially, because of this sort of instinct to sort of let our emotions dictate our investment decision making, we are essentially giving up almost 200 basis points or almost 2% of return on an annualized basis. You start to compound that over someone's retirement, you're looking at hundreds of thousands of dollars that's being left on the table because we let our emotions dictate our decision making. So when I think about investing, right, we know that emotions do play a part of it. We do that markets move up and down predictably in cycles, but it's about being really aware of our emotions and sort of having the best defense of knowing that we don't want to fall victim to that, and knowing that women can lean on some of their other instincts to doing that. And so, women do make naturally strong investors. We see this over and over again, whether it's, women tend to, take a longer term approach, or they tend to do their research. Warren Buffett famously said that women of the world have one thing in common. They're better investors than the average man. Now, that says a lot coming from one of the most prolific investors of our time. And so Warren Buffett is a great sort of sound or reason of sound to understand that if you can have, a rational, long-term understanding of how to sort of manage the market volatility, those are the hallmarks, if you will, of having successful investment outcomes. So women's approach to investing is very similar to that of Warren Buffett. If anyone follows him, reads his books, he believes when everybody's moving to one side of the boat, it's probably prudent to start going to the other side. When everyone's buying into certain parts of the market, he's probably selling. And when everybody's selling out of parts of the market, he's probably buying, right? And that's because he takes the longer term view, he does his research, and he ultimately trades less. And these are hallmarks that women also have. When we did research, we found that actually women, our female brain is sort of hardwired into making these decisions. And this was a study that was done by Dr. Luann, where she said the female brain it has tremendous unique aptitudes, outstanding verbal agility, the ability to deeply connect in friendship, a nearly psychic capacity to read faces and tone of voice for emotions and states of mind, and the ability to diffuse conflict. All of this is hardwired into the brains of women. And these are talents women are both born with, and men, frankly, are not, right? So it's all about understanding that sort of structural and the differences between women and men, and how that translates for us into investing. So let the sort of results speak for themselves, right? This was a study that was conducted, and they found that men traded on average 45% more than women. And that meant that their returns as female were actually 265 basis points higher. Now, whether that's because men feel that they get overconfident about when they make decisions to trade or how they make decisions to trade, we see this overconfidence typically happen where men feel they have unique information or different information that's going to sort of instigate that tendency to want to trade their portfolio, right? They know something, they read something, they saw something on TV, they talked to a friend, and they were overconfident in that decision. And that's likely what causes them to trade more than maybe women. So women are participating in terms of that, in the investment dialogue, but I think it's underrepresented in terms of our true natural ability, where we are hardwired to make really sound financial decisions. So let's turn our attention to the next part of the conversation, which is, what are some of the next steps, not only for ourselves, but maybe for other women around us? I think about all the things that we can be doing, whether it's changing the taboo around money, around investing, talking about finances at a younger age, getting organized and knowing where our money is, creating financial goals and working together with our financial planner to be able to take the appropriate amount of risk, right? Knowing that a financial advisor can help you through the different decisions based on where you are in your financial life cycle. So it's all about, knowing that having to take that next best action. And we have some ideas that we wanted to lay out for your conversations with either your financial advisor or with other women in your life. The first is let's get organized, right? We do this in our life, in other aspects of our life, probably really well, but for some reason we need a little bit of a push to get organized around our own financial affairs. Now, we want this to be accessible, but not too accessible, because we know that there's danger of keeping some of this stuff electronically. But we want to make sure that you have all of your important information, your documentation, really in an accessible place, both for yourself, as well as others in your life. You know, one of the first things that I did the first 2 weeks of the pandemic back in March of 2020 was I sent my parents a family planner. They happen to be snowbirds in Florida. I live in New Jersey. And I sent them an email with a family planner, and I said to them, they have to fill this out. God forbid anything happened to them, to my mother or my father. My brother and I don't know where all of that information should be or is. So it's about putting those files together, either online or hard copy in format, but just to know, what am I working with, right? What do I own? How much is it worth? How much does my current lifestyle cost me? How much is my envisioned lifestyle, maybe in retirement, going to cost me, right? And does my current nest egg today sustain that? Those are questions that I think putting some organization behind these documents will help you do. So when I think about how women, especially those that are married, how you can get more involved with your spouse is join the next meeting that you have with your financial planner. Don't just defer that to your husband. Be a part of that meeting, play an active role, ask questions, and know that your financial advisor wants you to ask those questions. What's next? Well, it's all about knowing your goals and knowing that your goals are helping to get sort of where you want your life to go. I love this particular quote by Ayn Rand, which says, money is only a tool. It will take you wherever you wish, but it will not replace you as the driver. So I always tell women, it's important to know that money simply is the tool that serves your life. And, you know, when I think about money, it's not just measured in dollars and in cents or zeros. It's measured in experiences. It's measured in what you sort of look out for your family, whether it's your goals, your personal circumstances, or your preferences. We all want to be the driver and know that we are taking action on that. So I always think about that example when you're on a flight and the flight attendant tells us, you know, in case of an emergency, always put your oxygen mask on first before you can help others around you. And that really resonates with me when I think about financial decision making for women. We tend to do so much and we're constantly juggling priorities that we often sort of deflect and defer a lot of these foundational decisions for ourselves. So we are the best experts of our own goals, but we have to give ourselves time. We have to give ourselves space and the luxury to be able to think about it, to dream about it, and to live it. The other area is investing, right? It is important for all of us to invest as early as possible. You know, there's a magic aspect to money and investing that we are sort of known to have, which is the power and the magic of compounding. It's probably one of the best tools that we have in our tool belt, which is the idea that if you invested just $1,000, if you were at age 25 years old, and you had 40 years to invest, by the time you reach 65 years old, that initial investment of $480,000 potentially can grow because of the power of compounding to over $2.6 million in value. You know, many people will actually wait until they have enough money to invest. Maybe they choose to wait until they are earning a certain higher level of income. And I would say, start investing sooner, even if it's $100 a month. Every time, you know, I was recently talking to somebody who was teaching financial literacy to her younger daughters, and she actually has glass jars. She has like 5 or 6 of them all throughout her house, upstairs, downstairs, in the kitchen. And every time they decide not to order pizza or not to go out for the night or go see a movie. They take that exact same amount of money that they were going to spend on pizza or going to the movies or buying a new handbag, and they put that money in a jar. And she said that after a year, she couldn't believe how much money that equated to her daughters. And they put that money and they invested it in the capital markets. And so it doesn't take a whole lot to get started because of the power of compounding, and investing can really start to propel that jar method even higher, even more. Last but not least is, taking that appropriate amount of risk, knowing that risk awareness is good, but risk aversion is not good, right? We don't want to avoid taking risks because we know the clearest way to creating wealth for ourselves is to be in the stock market. Stocks will beat bonds. Bonds are always going to beat cash, all while inflation is going to be eating away at our purchasing power. So, we have to be able to be in it to sort of invest and take risk. But with that, well, obviously, that the reward and the payoff is, if you have a long-term horizon, the reward will absolutely be there. Sorry, one last thing. I mentioned that before, but this is the last, I promise. It's the idea about the taboo topic of money. I don't know about you, but for those of you that are dialed in or listening to today's conversation, I know as a female, especially in my mid 40s, we didn't talk about money at the dinner table. It was rude. It wasn't great. My parents never talked about it. I was never allowed to ask, how much do you make? How much does this house cost? How much money is in the bank? And that might simply be because of family influences, right? It could be cultural, right? Sometimes that happens with cultural, money functions differently depending on cultures. It could be that there's just, less access to financial resources, knowing that we don't have influences in our younger years. But that will likely change as financial literacy is more and more becoming a part of not only college and high school, but we're seeing it now in even younger students also sort of understanding the concept of financial literacy. So the bottom line is, let's change the topic. Let's change the taboo around this topic. We're the ones that can change the culture, that taboo, and really starting the conversation. Taking our sisters, cousins, nieces, neighbors, friends, and in really talking about the topic as well. So I'm going to end today's conversations with, depending on your age, depending on where you are in your financial life cycle, these are potential questions or topics that you can explore with your financial advisor. When you're in your 20s and 30s, it's all about saving, debt management. It's about thinking about starting a family, right? So some of the questions you might want to engage your advisor with are, how much should my emergency fund be? Or, how can I best manage my student loan debt? We know that's a huge problem, a huge issue for a lot of younger people in this country. Do I need insurance? I'm 25. Do I even need health? Do I need life insurance at this age? Right? How do I maximize my 401k or my company's retirement plan? What child-related costs should I be thinking about if I want to start a family in the next 5 years or 3 years? And then if we get to sort of our 40s and our 50s, I call this the sandwich generation. These are the clients that are the people that I work with that are myself, right? You have maybe younger kids where you're still sort of managing that, but then you've got older parents, right? And I'm right in the middle of that myself. So questions I would be wanting to talk to my advisor about in this age bracket is, should I be thinking about retirement? What does estate planning look like, or college planning? I have 3 kids that are likely going to be going to college. How much do I need to sort of put away for that? Should I be changing my asset allocation strategy, right? What should I be thinking about for my aging parents? What are some of the things that I have to be thinking around the corner when it comes to maybe estate planning? And then lastly, for those of us that are in our 60s and our 70s, that's all about that legacy planning. What do you want to leave to your legacy? What do you want to leave to your children and grandchildren? When do I start taking Social Security or long-term healthcare insurance? When should I start thinking about that? Should I be donating some to charity, to organizations that really mean something to me if I have enough for myself and my family? and I want to get back to traveling, right? We've been dormant for the last 2 years. I want to get back out there before my knees start to give out. How much can I afford to go away on an annualized basis? So the great news is that the value of a financial advisor is incredibly important when it comes to achieving your financial goals. You know, they can be your planner, your therapist, your investment advocate. They can help you with rebalancing your portfolio, thinking about the tax implications, especially if you're a high earner, dividend income, all that stuff starts to play into factor, right? It's not how much you earn, it's how much you get to keep. But most importantly, they can be the financial quarterback. And this all adds up to a tremendous level of value by sort of being your accountability partner to help you stay on course, not make those emotional decisions that sometimes derail us, right? When we know we're using emotions to dictate our outcomes, and ultimately end in a place that feels where I have safety and security in knowing the path that I'm on and where I'm heading. So, as we've talked about today, women's health, women's wealth, we all make great investors, but it's all about getting organized, knowing our goals and having a plan to invest, talking about money and inviting others to the conversation. I applaud you for dialing in today because as we've seen so many times, that managing money is not an easy topic. It's one that a lot of people try to avoid. They just don't want to think about it. They have too many priorities. But the fact that you're here today, listening, taking notes, and taking action, I applaud you and I say thank you. So with that, I just want to say thank you for the time today. It's been a pleasure being with you on this topic.
Thank you, Nancy, for your insightful information. All of us at Visions Investment Services look forward to assisting our participants today. Please see the contact information on your screen and call us for your appointment. We are here to help. Thank you and have a great day.